What if I told you you could get a mortgage or even several mortgages without even having a job? Well, if you're an investor, it's now possible. A new loan product from one of the nation's largest private equity firms is betting on the red-hot rental market and doling out cash to investors regardless of income. Diana Olick explains how it works.
During the housing crash, this Florida home was headed for foreclosure. But investor Brian Russo put down the cash and turned it into a profitable rental. Now it's worth nearly twice its former value, but Russo couldn't capitalize on that.
There weren't a lot of opportunities for us to pull that cash out of these properties and using leverage to get into additional properties.
Until now. B2R, a Blackstone-owned company, recently launched a new mortgage product for investors based largely on the rental income of the property, up to $750,000 per property. Here's how it works. You need a minimum 20% equity in the home for purchase or 25% on a refi. Then, the rent on that home has to be 33% higher than your costs, which include principal payments, interest, insurance, and taxes. You also need a minimum 680 FICO credit score. Mortgage broker Matt Weaver says it's just that simple.
It goes solely off the rental income of the property and not the actual borrower's income, which, if you think about it, it's as a investor, it's common sense lending.
This is a 30-year fixed product, and there are prepayment penalties, so it's more for those who buy and hold, like Russo did with these homes, not really for flippers. The interest rate will be about 6 to 8% depending on the loan, but commercial investor loans today can be twice that and far more restrictive.
This product right here really fills a void for the real estate investor. It's going to allow them to purchase more property.
Weaver says there has been strong demand, the vast majority from investors who already own several homes they bought with cash.
Looking at my portfolio with approximately $6 million in value between myself and my partners, if we were to refinance all of those properties using the B2R product, we potentially could be sitting on $4 million in equity that could be reinvested in other products.
Russo says he thinks he can turn his $6 million rental portfolio into a $20 million one. As for risk, should rents suddenly fall, well, that's what the 33% cushion is for. For Nightly Business Report, I'm Diana Olick in Washington.